Hola, ¿cómo estás? I still have our chat up from earlier and I'm like making eye contact with it. Good morning, everyone out there in the land of the internets. Today is Finance Friday, and with us today, oh, it didn't save your banner. Okay, I can make a new one. Josh, the incredible accountant in his beautiful office with his beautiful clipboard. Are those thank you letters or what is behind you on the clipboard?
Oh, that's mostly stuff from my daughter, Drill.
I love that.
She used to be in my office quite a bit, and so she would draw stuff.
Well, welcome. I'm going to put this on your face. This is the Morning Muffin Show, your morning carbo load of real estate. I haven't quite figured out the composition of how I want to have us. Should we do bigger, or did you like the smaller?
That one.
No, okay. Awesome. Okay, well, welcome. Today's topic on Finance Friday is itemization, often known as tax write-offs. They're the same thing, right?
Sort of.
Sort of. What's the difference?
A lot of people use a lot of words interchangeably. And so a lot of times people go, that's a tax write-off. Well, it might be, but you might not get to write it off. Itemization, basically the way it works is you get a standard deduction. So as a single person, it's $12,000 under the tax reform. As a married couple, it's about $24,000. So you get that automatically. So in order to itemize, you have to have more than that amount to itemize. And there's some other rules and deductions to go to figure out how much you get to deduct of that. But people think that they get both, or that they just get to write it off because they have it, and it's not necessarily true. So basically, your standard deduction is $12,000 for single, $24,000 for married. And in order to itemize or write off anything, you have to have more than that amount. And that's a very simplified version of it.
Exactly. I love that. That is a very good, crystal clear explanation of it. Because yeah, you're right. People do, it's almost like a layman's term, the way that people throw out write-off, but it's not. You're exactly right. There is a limit. Like, here's your allotted amount. Anything and over is considered itemization. Now you can write-offs are, what goes into that. So I like that. That's a great explanation. Okay. So I have a couple things up. It looks like there has been in the news lately, Kansas. Do you follow? I'm sure you follow the news, right? Kansas tax laws changing a little bit. They made our headlines here in Minneapolis. But we don't have to talk about that. But we can talk about the big important things that people always want to itemize, like their car. Why do people want to write off their entire car sometimes? Is that true?
Yeah, people ask me that a lot. I bought a new car. Is that a deduction? It's not. If you're a business, however, then potentially.
So can we go over what are some of the things involved in a vehicle that could, for someone like me who does real estate, I use my car to go back and forth to the office, to go to client appointments, to go to, showings, to inspections, closings. So I'm in my car a lot. I put about 1,000 miles a week on my car. And that's both personal and business. So now with COVID, it has changed. It's a lot less. So, but can you tell me exactly, I mean, everybody knows that they can write off some mileage, but I guess I don't even know how to ask this question. There's so much involved. They want to write off car washes and oil changes and things like that. What is it under the umbrella that they can write off?
So under the tax reform that happened in 2018, 2019, under the Trump administration, they removed unreimbursed business expenses. So if you work for somebody as a W-2, you can't write off anything for vehicle expenses. Whereas a lot of union people used to get to write off mileage and other things. Now, there's two different ways to take auto expenses as a business owner. One is you can take mileage. So you track the mileage of how much is business and how much is personal use. And a good tip is to take a photo of your odometer January 1st and take a photo December 31st. So then you have your total miles for the year, and then track your business miles. Then the difference will be your personal miles. The other way is to take actual expenses, which is your insurance, receipts, etc. But you still need to know the business use percentage. You almost kind of need to track mileage. And so depending on the industry, how much you drive, generally we find mileage is a better deduction. But for some people, it's easier to track expenses if you have two vehicles, one for business and one for personal, and then everything's a business expense, and then you run everything through the business account, just pay for everything. It's easier for accounting purposes than trying to figure out mileage.
Oh my gosh, I have to tell you, my trouble with all the mileage apps out there, like when you get stuck at a like red light for too long and it counts that as a stop, and at the end of the day, like I'm showing 5 houses, but yet at the end of the day, like I'm going through the mileage app and I've got like 20 things to flip through. I want to just shoot it and like not care about it at all. It's the worst. But not only that, but if you get a message and on your phone and you touch your phone and it's like not available while driving, and you're like, I'm not driving. Then it stops it again. And it's like, oh my gosh, there's no perfect system except for like writing it down in a ledger, I feel like. And even that is daunting.
It's a lot of work. But it's important that you document it while it happens versus later, because recreating records can be a pain. And plus, if you have these mileage logs, if you ever audited, you're going to win in an audit. It's like it's the same equivalent as your receipt when you go to buy an office expense or whatever other type of business expense.
Yeah.
But again, as an individual, you're not allowed to take these deductions. However, not every state follows with federal tax law. The states have started to veer since the tax reform. And so in Minnesota, as long as you have over the standard deduction amount or the deductions, you still might be able to itemize and take these things on the state, but not the federal. California is probably the best example, where their tax laws are pretty much almost completely different from the federal tax law. And so sometimes that's important to note depending on the state you live.
Yeah, of course, which is one of the reasons why Kansas made the news again. I wanted to go back. I know this is kind of like going back, but you mentioned taking a picture of your odometer. What I actually do, what I found most helpful, is I just do my oil changes at the beginning of the year. Like I try to get it almost on January 1st or the 31st every year, but I'm not the only one that has that in mind. So you might be waiting in line.
Never heard of that. That's a great idea.
Because then you have the actual physical receipt, and it's all there and it's all proof, because you can look back at it and it's already in your taxes. So, okay, moving along. Okay, hold on. I have to look at my other questions here. Okay, so I know I'm going to ask some car questions, but people always want to know about like if they wrap their car or if they have a sticker on it. Like they're always trying to find a little extra way to get a little more out of their car expense, because it is a big expense. Can they write off, like, what part of the payment? Can they write off interest? What exactly? I know we're giving some advice here, so that you guys know with caution, please talk to your own accountant about this. But what are the ways, the sneaky ways that you see people trying to sneak in itemizations?
That could be a long conversation, but the short answer with vehicle deduction is you either take actual expenses or you take mileage. Period. So if you're taking mileage, the expenses are irrelevant. Whatever, if you're taking actual expenses, then you need to know all the expenses. And regardless, you need to know how much is personal and how much is business use to determine how much is deductible.
I love that. See, that's so smart. It really is that simple. Don't overcomplicate it, you guys. Okay. Now, what about, okay, so now everybody is working from home with COVID. You're going to get tons of home office questions when it comes to itemization. Can we explore that opportunity?
Sure. With the tax reform, that has been removed from the tax code, so you don't get anything.
Mhm.
If you're a business owner, you can still take it. And again, some of the states don't follow suit with the federal tax law, so the state might still allow it. So you still might want to track these expenses regardless. But, just for example, in Minnesota, you still have to have above that standard deduction, the Minnesota standard deduction, in order to take it anyways, because they're giving you an automatic dollar amount against your income. It's not excuse me, it's not and, it's or. So you get the standard deduction or itemize whatever's greater.
Okay. Yeah. So I know I had a, I'm going to just use this as a great example. I had a daycare woman who, she didn't want to itemize any of the stuff and I was having a really difficult time with her, like with expenses and how much she wanted to charge me. And I'm like, a lot of this stuff is a write-off for you. She was my nanny. And I'm like, would you like to take a class? Would you like to talk to my accountant? She was very against it, which is understandable. It can be sometimes complicated for a lot of people. I like the way you put it. It's like one or the other. And but it is worth asking the question one or the other, which is greater. Don't you think it's worth asking?
I think it's a conversation we have with every new client. What I've found is that most accountants take the documents, do the tax return, give it to it, and give no explanation, which I think is horrible. The part of it should be your job is going to an accountant to ask questions and making sure you get the answers. And part of it should be, I think, accountants should spend more time with the client, educating them. But again, usually when you're paying for tax preparation services, you're not paying for extra consulting and advice. You're just paying to get your tax return done, not the advice. And so it's worth paying for an extra consultation session to answer these questions so you understand it better. Because if you make better choices, you're going to save more on tax and keep more money in your pocket. An accountant should, in theory, pay for itself. Even if it's, you might go to TurboTax and they might charge you $100, $150 to do it. Okay, if you go to an accountant and you have to spend $100, $200 more, you'll probably get, at least your return will be accurate. You can answer any question you want on TurboTax. It doesn't make it correct. And so it's just computer software. And so garbage in, garbage out. So if you don't understand the questions you're answering, it doesn't necessarily make them correct. So.
Right. Well, and it's because I hate doing my taxes. I can remember I did them once myself. And I had my paperwork all spread around me. This is even before. This is just when I was a simple W-2 employee, and I was like crying on the floor. I'm like, I hate this. But there's some people that love doing their own taxes. However, I really look to you and to my accountants as a financial advisor almost, because the fact that I honestly, I don't know. And I do get really overwhelmed by all the things that, in my life that are complicated. I think of personal income tax. Okay, I'm going to get a little weird. I think there's two economies. I think there's the economy that everybody thinks about when they think about the economy, but then there's the household economy and what it takes to run a household and things like that, and savings and growing old, and like really what the economy of our our family is like. And I need financial advice for that, because I just like the big economy. There's tons of advisors out there for like big business, big corporate world, big government business. But you guys, the accountants, the tax attorneys, the financial advisors, are really what help me and my family. And so I'd like to turn a corner a little bit and talk about savings plans and itemizations like SEPs. mutual funds and things like that. Can you talk a little bit about why it's important to maybe have some money in those accounts?
So I'll give you an example with my parents. They retired, and each of them get $700 a month in Social Security. Their mortgage is $900. So if you're not saving for your retirement, you can't count on Social Security to be the only thing that's going to carry through your retirement. So it's important to save early because of compound interest, and people probably heard of this. You invest now, $1 today is worth $100 later. And so investing now can provide tax benefits depending on the retirement account you choose. Your employer might offer one and match it, so you're going to get free money by putting in money to the retirement account. And so you want to maximize that as much as possible. And the nice thing about employer-sponsored retirement accounts is that they take it right out of your check, so it becomes a habit. And then you can manage your money after putting money into a retirement account. Businesses have some other options, and it just really depends on the situation. So it's hard to give you a general advice. But at the end of the day, if you're not saving for retirement, you're not thinking in the long term. We've been consumers mostly, and a lot of times you're just wasting money. So buy quality, I always say, so it lasts. And you should always pay yourself first. Mm-hmm. And what that means is pay yourself 10%, put that away for yourself, and have that money work for you. That's what rich people do. They don't work for money. Their money works for them.
Right. Well, and I like this, like I'll have to pay this much, right? And then my accountant's like, okay, what did you contribute to your retirement, like via IRA, SEP? I have like the entire rainbow of savings accounts, by the way. And so it's like, if you put in, and he'll tell me, this is why I come to him for financial advice, is he'll tell me, well, if you put this much, you'll only have to pay this much in taxes. And like, to me, not only am I paying myself, but I'm paying less money in taxes as well by contributing to those. So it kind of gives me this like greater satisfaction of like sticking it to the man.
It's a different game when you're self-employed versus an individual. Because when you're self-employed, you're not necessarily paying in taxes and then settling up at the end of the year. At the end of the year, you're, what can I do to not pay taxes? A couple of different trains of thought, and you should maximize every tax deduction you could. But I think it's a better strategy to go, how much can I pay in taxes? And not because I want you to pay more in taxes, because the more money you make, the more you're going to pay in taxes. And a lot of tax deductions are not dollar for dollar. So if you spend $1,000 in business deductions, and you just because you want the write-off, well, and let's just say you're in a 20% tax bracket, you're going to spend $1,000 to save $200 in taxes. The math doesn't add up.
Can you just say that again for the cheap seats in the back? Like, it is not dollar for dollar.
Yeah, it's at the end of the day, again, say you're in a 20% tax bracket, spending $1,000 and you're only saving $200 worth of tax doesn't make sense when you could have not spent $1,000, paid $200 of tax, and you still have $800 in your pocket. Mm-hmm. Business is about cash flow management. Cash is king, and you want to build your business cash. So when things like COVID and other things hit in these downturns of the economy, you can still keep going along paying your bills. A lot of times, small businesses are feast or famine, and once when you start, it is what it is. You have to get through that. Once you start getting through that and have consistency, cash flow management is super important to grow a business.
Now, that's why it's called building a business. It doesn't start up here. It starts down here, right?
Yep.
Well, Josh, we're running a little long, and for the sake of your time and your business, I'm going to say goodbye. I truly enjoyed having you on, and it doesn't look like I have you on the calendar anytime soon, but it's also business season for you. So you guys, if you have any questions for Josh, I'm going to drop his his website in the comments. Please go visit. You can actually set an appointment with him, have an important conversation about your business, your financial decisions, and your taxes with an expert.
Thank you.
You're welcome. All right, you guys have a beautiful day, and I'll see you on Monday. Bye now.